JBlog, 29th of June 2010. Certainly had a wild day in the market today. Not really that surprising. What is surprising how long it took. But this was a major down day for today. And the important part about this down day versus other down days is not just the size, but where it happened. Basically, it broke support. This is the S&P 500, and it broke support that had established itself around 1050. So we have a lower close here, and that is very significant. So we have a lower high and a lower low. The next point of support is right here at actually right here at 1030, and then we've got 1025, and then from there 1000, and then we could very well retest the lows of June. And if that doesn't hold, then of course it is possible to even retest last year's March. Now that obviously is a very long time, very long way down, and that will not happen all at once. But that could happen. We could retest these lows. We could break these lows. Everything is possible basically at this point. The bulls have finally heard due to consumer confidence dropping, that consumers really aren't believing in this recovery. Here's the consumer discretionary chart. I have this particular um, ETF short. It has surprised me. I've mentioned it before. This final run up, maybe a topside blowout, but again today very detrimental day on higher volume. So let's see what happens tomorrow. But basically, this is a very bad technical setup, very bad chart, and I'm not even sure if the bulls can save this one with the help of the BPT or anything else. The way I look at it is Wall Street drove this rally. The so-called pig farmers, those are the big trading houses, and the reason why they call them pig farmers is because they refer to the investors as being pigs, because they squeal on the way in and they squeal on the way out. It's not very flattering. It just shows what Wall Street thinks of the average Joe out on the street. But I believe that the pig farmers have been driving this market up with high volume trading. There's been no support. There's been no fundamentals underneath. They were hoping to induce the investing public to go in and buy their over priced stuff, and the investing public simply is either not buying into it, or I think they're just broke. I don't think people have money to invest anymore in great masses. Um, so let's see how this continues, but this could get ugly. On the news front, some very interesting stuff going on. California on the verge of system failure. This is Globe and Mail. That's Canada's main, one of the two main newspapers. And the interesting part in this article is this particular chart. We're talking about states that have a budget shortfall um, that is 20% or above. And as you can see, that actually accounts for a significant uh, part of the United States. That is basically what's been happening. Federal government has had the ability to sell massive amounts of bonds, borrow money. Basically, they're borrowing money against the future taxpayers, setting up a system where the U.S. will forever be indebted to whoever buys these bonds, to provide them, of course, with cash flow. I mean, who cares if they only pay 2%? That really doesn't matter because the money's not real to start out with. But the taxes that need to be paid in order to pay off the interest that is real. And it basically sets up an aristocracy where you've got, not in this case, not landholders, you basically have bondholders, and the taxpayer, rather than the serf that used to work the land, then has to hand over a sizable part of their money that they make every month. It's again, it's basically establishing middle middle-aged fiefdoms again. It's pretty wild when you start digging into it. There's an excellent book called Hamilton's Curse. Do read it. It talks about that, and it talks about how this has been going on for over 200 years with Alexander Hamilton starting out. Here we have an interesting article that I was following about the big banks that, of course, have new regulations and blah blah blah. Crimea River, still making billions of dollars in profits. But what actually caught my interest on this one is on the second page. It talks about derivatives, because of course derivatives are highly profitable, and it talks about that in 2009 there were $614 trillion in derivatives. That's just mind-boggling number. That is beyond anything. Um, and I'm thinking this is such a big number. If anything ever goes wrong, I mean, I know there's two sides to this trade, but if they unwind badly somehow, that is an amount that is so big the entire planet could not fix that. It's insane. How can you build a system like that? It's just wild. Um, of course, there was a Wall Street Journal article that talked about the confidence waning in Obama and the U.S. outlook. So these are basically the warning signs that the public is just not buying into this. The public is not buying into this because there is no jobs, and the public knows that. The public doesn't care that the banking sector is doing well. Who cares, right? I mean, you want a job, you have to buy food for your family, you have a place to live. That's what matters to the small guy on the street, and he's just not seeing it. He's continuing to see unemployment. Um, this probably is the biggest of a story of them all. This is that the bill that was talking about extending the extended welfare has been cancelled by Congress, which basically cuts off 1.3 million unemployed from assistance by the end of the week. That is quite a shock. Um, and of course, that's 1.3 million people that suddenly do not know where next week's money is coming from to buy food. So they will clamp down on basically anything they can. There will be no discretionary spending for these people anymore. That will be a major chunk taken out of the economy there. So that's a big story. Other stories that I'm following are here is jobless claims decline. This is funny. When you read through it, it says that jobless benefits decreased, people on jobless benefits decreased by $45,000. And then the next line it says that the extended, people on extended payments has gone up by $45,000, 45,000 people. So this is basically 45,000 people who dropped off of one and onto the other. There is no improvement here, but you have to read into the article to actually understand that. This article shows that not everyone is doing badly. In fact, luxury car manufacturers are adding shifts because they have so much demand for their cars, BMWs, Mercedes. There are some people that are becoming extremely rich in this, and of course there's a lot of people who are losing a lot of money. Here's another article on, again, the states, the individual states being in a lot of trouble. This talks about just today's drop. So there's lots and lots of interesting news out there, and a lot of hope. And the saying you have to remember is descending the slope of hope versus climbing the wall of worry. There's lots of hope out there, and that still means we are bearish. Anyways, good luck next week. Make lots of money, probably be on the short side. I'm definitely short. See you later. Bye.